Hey, yo, what's poppin', man? Hope you guys have been well. Back to back, Avi here. And today, well, I wanted to talk about. Let me go in. We covered this in the previous. Okay, I wanted to talk about my sell loss over here. I'm gonna talk about the successful sell over here, and I think we may have time for this loss right here. I think we do. And then in the next video, we'll cover the sell and then the buy. Very successful, beautiful trades here. And okay, see, it's in times like these, right? This happened yesterday, by the way. It's in time. I got a nasty sell on gold, I'll tell you what. But back to the point. My bad. It's in times like these where you thank your discipline. If I were to say, oh man, I'm gonna just hold full volume, bro. Full volume. Take all of these equal lows and stuff like that. Hold full volume, bro. Right? I would be killing. I wouldn't want to say that on YouTube. I don't want to get, banned or something. But I would want to off myself, bro. For real. Okay? So stick to your plan. All right? This is my intra target, and I took off, significant partials. Right? We'll talk about that in a bit. And I was holding around 20% of my volume, of my initial volume was 100%, of course. I'm just holding 20% over here. And give me a sec, man. I think I haven't had my chai. Give me 1 second. Man, it never fails to amaze me how beautiful of a concoction this drink is. Seriously, you guys have to try it, man. If you guys, especially like normal homemade chai is one thing and it's fantastic. Arguably, homemade chai is the best and it's unbeatable. My homemade chai, the way I make it, of course, is better than everyone's. But if you guys want to get something nice as well, really, really bang on nice, if there's a coffee bean in you guys' area, go to Coffee Bean and order a chai tea latte. I know chai and tea is the same thing. It's stupid, but that's how they call it here. Chai tea latte, hot, regular size. You want it big, right? And you're welcome. That's all I'm saying. If you guys have a coffee bean, you're welcome. All right. With that being said, man, I'm wired up. I have my buzz, not from a beer though, from freaking chai. And let's talk about this. Okay, so we took this buy, ECB buy bump. Okay, where do we look for the sell? I'm gonna hit to the H4 time frame. Well, no, I'm gonna hit to the daily time frame, then the H4, and we're gonna talk about my loss. We're gonna talk about my successful trade. Let's talk about it. Okay. So over here on the daily, we can see what? Let's get rid of all of this. We have ourselves a strong high. Why is this a strong high? Because it was responsible for a manipulation. And then we have, this is our inducement into POI number 1 and POI number 2. Over here, right, there was absolutely no reaction. Let me show you proof that there was no reaction. We're going to hit to the H1 time frame. Right, this was that daily area, the IPA. There was absolutely nothing here. No H1, no M15 even, nothing of the sorts. Let's go back to the daily. All right, this is the uppermost area. Now I know what you guys are thinking, Avi, if this was a strong high, why did it eventually over here get stop hunted just a little bit and then finally very much stop hunted, right? How many pips? Like 12 pips for the stop hunt of this high. Why? And the reason for that lies in the monthly raid of the previous month's low, right? We've talked about that in, I think, the previous video or the video before that, the one that's uploaded either on Friday or Saturday. But let me actually show you guys what that looks like. Excuse me, I'm just back on the same broker. Seems like the chai is not working, eh? Okay, there, right here. We had ourselves, when this month opened, okay, I'm going to keep my chart here, I'm not going to move it, relax. When this month opened, we created a high. The low of the previous month, which was January, we are on February here. The low of the previous month, which was January's low was responsible for taking out it doesn't matter which month it is, it's responsible for taking out the previous month's low and also very significantly into a point of interest. What is this point of interest? You can either call it a hidden base or just an FVG 100% fill, an IPA, whatever you want to call it. Point is, it is a demand area, okay? Or an area where it's interesting for us to look for buys over sells, okay? And so when price did that, this raid or this stop hunt, right, of the previous month's liquidity is what we can say is the context for sponsoring the up move. Okay, in that case, how I like to look at it, we'll get into details later, but when price raids a previous month's low, previous week's low, whatever, I like to look at the structure on a time frame or 2 time frames below that. So for instance, we're on the monthly. I may look at something like the daily structure, right? I may even go as low as the H4 if I'm confident enough. But that is what, just a little bit of an introduction into that, which we'll talk about in a future video. Okay, but point is, we took the liquidity and we're in an area where it does not make too much sense for us to look for sells at. Right? Doesn't mean sells can't be there. It just means it doesn't make too much sense for it to be there. And so what would we target then? What would be our context just on the monthly chart alone? What would our context be? I'm not even going to look at the weekly, daily liquidity, just the monthly. Well, our chart was once over here, just like that. And for me, our draw on liquidity, because we're looking at liquidity because it's called a draw on liquidity, right? For me, would be to fill up this inefficient pricing right here. FEG inefficiency, it doesn't freaking matter. Liquidity void, it's the same damn thing. It's a gap in the market. That's what it is. That's all it is, in fact. Okay, and I would look for this liquidity to be filled, right? For price to come and take the previous month's high, okay, and fill up that inefficiency. It doesn't matter how much. It doesn't matter whether it comes to the IPA. It doesn't matter whether it's 50% of the FEG. It doesn't matter whether it just nicks the previous month's high and just a little touch into the FEG and drops, which is what it did right here. Not even the equilibrium, and it still dropped. We do not know how that's going to go, right? Unless you have some kind of knowledge of how the central bank system works and all that stuff, which we as retail traders, we do not have that knowledge. Okay, so once price just takes this, we know, okay, it makes no sense for us to look for buys necessarily in here. You see how that goes. When price came in here, took the liquidity from the previous month's low into a buy zone, doesn't make too much sense for us to take some good quality sells. Same thing when vice versa, when price comes up, takes liquidity of the previous month's high into an area of selling, which in this case would either be the IPA, the hidden base, or in this case filling up the inefficiency, we'd be like, doesn't make too much sense for us to continue buying. It's not very smart. It's not very logical, right? There could be buy scenarios and stuff like that. Sure, I'm not taking anything away from that, but it is not very highly probable in my personal view, right? So when price came up in here, you could have looked for a sell. Anyway, let's come to the actual setup that we have in hand today. And the setup that we have in hand today is basically price taking the previous month's low, coming back up, right, in February month to take the previous month's high and fill up that inefficiency. Okay, and once it did that, that was on the previous chart. Once it did that, let's go ahead and draw it up on this chart as well. Why not? Let's not be lazy. Just want to confirm that I'm recording. Give me a second. 7 minutes in. Beautiful. Mic check. Okay, beautiful. Right, when price came up and just took it, just ran out the high, right? That was right here. Let me show you guys. This is the previous month's high. Previous month's high. Oh my god, bro, TradingView is actually so dumb, seriously, sometimes. And this was a was it? Yeah, it was a weak high. My bad. I'm just questioning myself. Why was this a weak high on the monthly? Because this high failed to go and break the structure of this low. On a lower time frame, it did though. I'm talking about the monthly, smartass, right? It didn't break the structure low. Okay, just like this one, just like this high. See this high right here? When price came down, it failed to break the structure. It failed to have a body close below. Oh, but it closed on the daily. I'm talking about the monthly, smartass. Again, okay? And so what happens? This becomes a weak high. It becomes a target. Okay? Simple as that. So when price came in here and took that liquidity, let me cut to the chase. I do not want to waste you guys' time. Price came up here, right? Firstly, I knew that maybe there could be a potential reaction that plays off of here. So what I did was very simple. I went over here to the daily, okay? And I went to the H1, right? And what I did I went to the H4, my bad. And then I just did daily to H4, just like that. That's all. And I called it a day, right? Once price made its way into here, okay, I just looked at the lower time frame structure. In this case, it was the M5. It gave me a beautiful setup. This is an absolutely, besides the fact that the monthly did not break that low, this was an absolutely beautiful picture perfect setup that worked right here, right? And then stopped me out of this sell right here. So just wanted to cover that. This is an absolutely perfect, very good entry. It's just that it did not work out. And I'm giving you guys the reason as to why potentially it could not have worked out. Because in hindsight, when I look at it, oh, okay, yeah, I see why that would not have worked out. It's reaching in for that inefficiency and grabbing the liquidity. Makes sense, right? That now we know a potential reason. Can we avoid it in the future? Well, it really depends, because there have been numerous instances where trades like these have worked out, or excuse me, trades like this have worked out. right? So how are you gonna place that distinction? It's all a game of probabilities. Sometimes trades like this don't work out, like how you're seeing over here. It comes and stops out the very top. Sometimes trades like these do work out. It's completely up to probabilities. You will never be able to know. Again, as I said, unless you have some kind of insider central bank information, you will never be able to know that, right? So the best thing to do is to manage your capital. Even the best smart money traders, the highest earners, still make losses. And you have to question it. You have to think to yourself, how can it be that if they're such high level, high grade smart money traders, why don't they have a 90% win rate? Why don't they have a 95% win rate? Heck, if you're smart money and you're trading like the banks, quote unquote, why don't you have a 100% win rate? Is it just purely because you're reading the markets wrong at that moment when you make a loss? Or is it also a fact? It could be that you're reading the markets wrong. I'm not taking anything away from the validity of that, of that kind of a mistake or that kind of possibility as to the background on why you took a loss. But are you just going to ignore the fact that sometimes in any strategy or in any case, probability can be against you? And it is what it is. You fell on the wrong end of probability. Let's not throw that away. That's definitely a possibility as to why you lost the trade. Okay, so once price was in here, all of it was very simple. In fact, I'm going to hit to the H1 and draw up some kill zones. I can't remember whether I used kill zones in this. It may have lined up with one beautifully, but I'm going to draw it anyway because I know a lot of you guys, I can see you guys love, especially when you guys are first starting out, right? You guys love like the kill zone stuff. And I don't blame you. You know what I mean? I really don't blame you. It's a very nice way, very simple way to add discipline to your trading. You know, so as I said, I really do not blame you. Let me move this thing up real quick, and then I'm gonna get another one for the New York, and I'm gonna show. I think for the New York one, I may have actually done a kill zone. I'm not sure. I generally forgot. Okay, so let's talk about this. Now let's go to the M5 real quick. Okay, let's talk about the London and then the New York. Okay, so when we look at the London, you can see how beautiful of a setup that was, right? So now, how would this have been played for maximum efficiency, right? Let me tell you. We had, first of all, this high that stop hunted this previous high, broke structure right here. You can argue over here on the M1, M3, but very clearly we made a sell, buy, sell, and you know that's really on the lower time frame. We made a buy, and we can consider that as a structure break. It doesn't matter because if you're using this as your structure break, that would have been on the M1, and that would have been perfectly valid as well. Now, why would it not be highly probable for us to take a sell right here? I mean, Avi, look, we have ourselves our SNR liquidity. See this? Playing off of this support breaks becomes resistance, right? We have that, Avi, feeding into here. We have, this is our strong high. Why can't we take a sell over here, place our stop loss over here, and, you know, we get stopped out? First of all, this trade, there's absolutely nothing wrong with it. Is it highly probable? I'm going to give you reasons as to why it's not, but it's not. It's not highly probable. However, would you have taken a loss if you took a trade right here as a scalp entry? No, you wouldn't have, because the question you need to ask as to whether you took a loss or not is where your stop loss is. And is this the strong high? No, it's not. Is even this the strong high? No, it's not. Is even this the strong high? Yes, it is. It is a strong high. So that is where your safest stop loss would be. And especially if you're, you know, just a session trader, you take yourself a sell right here. Where are you targeting? Low resistance liquidity. Boom, you got it. Into what? Right here. You want to be a bit more conservative about this take profit? No problem. Take your profits right here. But just know that it's not very highly probable for you to buy in here, so you might as well take some partials here, break even here, and then take some more profits here. And then guess what? Sell to buy range using this as our sponsorship. Why here? Because look, SNR. Well, YouTube SNR. Not the most efficient SNR, but yeah, it's there. All right, and you can see. So yeah, where's your drawn liquidity then? Probably going to be this over here inside the FVG. I would not take a sell in here because why? We have equal highs above, and plus this is a reaction playing off of this M5QM. So I look for this reaction here to play off and become a bigger time frame bearish QM, but that didn't happen, did it? All right, and it doesn't have to happen because if you're smart about it, your take profit, especially for me, it's right here. And yes, for sure, over here it played against me. For sure, I agree with that. When price came up here, very unfortunately, I was not paying attention to the kill zones. It is what it is. It's happened. I make mistakes, and the difference about me and others is that I'm gonna tell you when I made a mistake. It is what it is. I made a mistake. Okay, boo-hoo, cry about it, right? I took a sell over here, just 2 pips from the top. Took a sell over here, and I got completely stopped out. Okay. And so yeah, that's that actually. That was a mouthful. And another way that you could have played this. Okay, now let me give you guys two reasons as to why this is not very highly probable. Then let me give you reasons as to why this one or this one would have been higher probability. Okay, the first reason is because this high that you're looking to sell from, let's say you're trying to be like me and trying to have some aggressive stop loss, which I would have. I love to always have aggressive stop losses. That's just the way I trade on SMC on EURUSD. Okay, and let's say you were to have your stop loss above here. I would not consider that safe. First reason, because this high is actually a part of SNR liquidity. And I never liked that. Just like how when you see the world's most perfect bearish QM, picture this in you guys' head. Just like how when you see the world's most perfect bearish QM, but you look right above that and right to the left of that is some kind of high that makes the QM in question become a QM with equal highs right above it. And now you're second guessing and you're sitting there and you're wondering whether, is this exactly a very high probability QM that I want to take a sell from? Because we have equal highs above, and that's liquidity, and that could lower the probability of this QM. And you would not be wrong whatsoever. That would lower the probability of a QM actually working, equal highs or liquidity above, right? So that's that. Now, that is the first reason as to why this is not the best thing. Now, the second reason is something that I'd like to introduce that's new to the channel. It's not new to SMC, but it's new to the channel. I've never talked about this before, I don't think, right? Is to use your Fibonacci retracement tool with a 50%, just like this. Let me show you guys, just like this, with a 50% right there, low and a high, to determine where on the spectrum is higher probability for you to sell or buy from based off of the range that was created. Okay, now what's the range that was created? That sounds very fancy, okay? What was the range that was created? Real simple. Buy, sell, buy, sell. And now I know you guys are thinking, well, Avi, what about this buy, sell, buy, sell? Listen, to make it very simple, to find your range that you want to use your Fib tool on, it's real simple. You find your significant low. If you guys do not know what a significant low is, watch the first ever video that I've uploaded on this channel. Find your significant low, and number two, find your strong high. Now, the reason behind this is because your strong high is responsible for a manipulation, and the break of your significant low is what is responsible for the significant displacement in price. Okay? The range of buying to manipulate sellers and then selling to manipulate buyers from the support. You're manipulating sellers from the resistance sellers, and then you're manipulating buyers from the support buyers. And then you're coming back up into that range and then continuing down. According to, well, Avi, you're coming back in a range, you could go either way, right? No, it couldn't, right? It makes more sense for you to follow where the strong high or strong low is. And in this case, we have ourselves a strong high. So what can we expect when price pulls back into the range? To create a new low. That's what we can expect. Okay, so how do we use the Fib tool in this case? Very simple. We take ourselves from the significant low all the way to the strong high. That is it. Yeah, that is literally it. And all we do is determine what POIs are at 0.5 or 50% of this range and above. And those are going to be your higher probability POIs. Whilst the POIs that are below the 0.50 50% of this range are not so highly probable. Give me a second, let me sip on some chai. Think about that for a minute now, huh? Alright, y'all, give me a second. I got an alert on gold. Yeah, it's coming to my daily obstacle right now. I am bullish on gold and like the monthly, but it is coming to my daily obstacle, so just give me a second, man. Just give me a second. Gold. What a beautiful sell it gave. Very nice sell for over what? 200 pips, I think, on gold. What's that? 196 pips. Yeah, that's plenty much. I'll tell you what, that's plenty. Let me put another limit for lower, so if price actually does go lower, then I'll just freaking probably place a high risk buy. I don't know. We'll have to see. I base everything based off of candlesticks, so especially for SNR, base everything based off of candlesticks and breakouts. And it works really well on gold, tell you what. Okay, so yeah, let's come back to this. Now, what are the POIs that are 50% and above? Real simple. We have, I'm just gonna circle them. We have this OB, bearish OB. We have the IPA, and the OB in here. Those are all the POIs that are above the 50%. So now we know, we have two reasons not to choose this. We have two reasons to say, you know what, I think this high is going to become liquidity and I should probably place a smarter entry above. Or even above here, which I got stopped out at the end, but over here I didn't, right? And it turned out beautiful, right? So what you could have done was done something aggressive like such. Okay, you could have taken this, you want to be aggressive, you take yourself 2.5 even. Okay, 2.5 pips. I'm just giving you an example of what you can do. Again, it's not financial advice. I'm just giving you examples of what you can do. You take yourself. My target will be there. And we take our short. Boom. This would be considered a scalp trade. Right there, and we make it 2.6 because of spread. Again, being very honest with you guys, and that would be your take profit. 1 to 7R. That is very good. You know, if you were to risk 0.5, 1% on this trade, you that's great. That's really, really great, right? And then you take another sell over here, and unfortunately, you get yourself stopped out. It is what it is. Okay, right now, I think we've spent enough time talking about the loss in this trade. Let us spend some time talking about the win. Now, what happened here was very simple. I'm going to hit to the monthly one more time, and we're going to draw out that line that was on the monthly, the previous month's high. Now, I'm going to hit back to the 5-minute time frame. Right, and what happened was very simple. During the New York session, in fact, the exact same thing happened over here, except for the fact that I wasn't paying this much mind because I was enjoying 190 plus pips on gold. Thank you very much. But yeah, gold will always give you more than these currencies, man. I'll tell you that. Gold is such a good pair, man. But anyway, let's come back to this. All right. So price made its way up in here. The point is price took the previous month's high during the New York session. Yeah, I'm pretty sure I looked at kill zones for this one, won't lie to you. Came in during the New York session, right? New York open right here. Even if you were to I think if you were to consider 8, you would have probably been like, oh damn, this is kind of outside the kill zone, but it's not. It was actually created well within the kill zone. But yeah, so anyway, 7 p.m. Just be alert. Even though there's that whole time shift thing, just be alert for the normal time which your kill zone starts. Okay, which for New York it'll be 7 p.m. Malaysian time or 7 a.m. New York time, and for London that will be 2 p.m. Malaysian time or 2 a.m. New York time, right? But yeah, so price comes in and we took that liquidity. Now we can expect some volatility, right? But I'm going to pay attention to a lower time frame QM. Now I beg to God that I can go to the M1 and show you guys this. I should be able to. I'm not able to. This is fantastic. It just stops before that. Okay, well, what I want you guys to do is real simple. In here, hold on. In here, okay, this is the high that took the previous month's high, right? Took the previous month's high during a kill zone, New York kill zone. It gave me an ICT breaker and OB setup, SHBMS RTO. Okay, now if you guys are not familiar with that pattern, you can always take a look at ICT's videos. SH meaning stop hunt, BMS meaning break of market structure, RTO meaning return to order block or return to origin, and origin's more of a supply and demand term. If I'm not wrong, RTO, the O for the RTO stands for order block, not origin. But yeah, anyway, let's get back into this. M1 basically gave me my reason for entering, and boy was it a sexy stop loss. And it made sense. It made sense for it to be a stop loss as such. Now on the M1 time frame, I'm going to get rid of everything here, guys. I'm going to get rid of everything. And what I'm going to show you guys here is what exactly happened on the M1 time frame in here. We basically did something like this. And here was basically a bullish order block that got broken after manipulating a previous high, which means that's a breaker. And so that became my range. And I said, let me play from the order block, right? And so basically my entry was going to be right there with my stop loss, a single pipette or maybe even 2 pipettes above the strong high. This was a strong high, right? Alternatively, what pip entry. Just know, if you guys are wondering, Avi, I don't see anything here. Prices went up and came back down. What you guys need to know is it's on the M1. That's why I can't show you the M1 because I don't have TradingView Premium, right? And I don't need it. But on the M1, it gave me the bearish QM, right? After it took that liquidity, took the previous month's high during New York kill zone and gave me an M1 bearish QM. Okay, and so basically an M1 breaker setup means a seconds time frame proper QM, like a proper QM that does, you know, all of that, right? But on the M1, it's just a little order block here, just a bullish order block that then gets broken. But on the seconds time frame, it's valid. So that's what I mean by it's aggressive, and that's why I decided to go for the uppermost area. And again, you could have just done a 2.5 just like that. Perfect as well. And so that is the reason, or yeah, the whole thing behind this sell. Where's my target gonna be? Can already see it right here. No hindsight BS, by the way. All of these entries are in the AKFX journal. First and only link in the description section below. Boom. That's my first target. Yeah, I know you could say all of that, right? Well, no, sorry. I need to go break even first. Of course, how can you just take a target? Yeah, you need to go break even first. So for me, my break even point would be right there once price broke structure. Okay. On second look, I don't think that was my take profit. No way was that my take profit. Hold on, I'll check it actually in a second, but I'm just trying to jog my memory here. Nah. Taking your profits here. Yeah, okay, I get it. My bad, man. All right, I've jogged my memory and I've come back with something. Here was where I went break even. Again, I'm gonna go to the M3, right? I'm gonna show you guys why, because over there we basically had ourselves a significant low. This low was responsible for this manipulation. Price came back and broke that significant low. I don't really expect for price to come back all the way up again. It has happened before, but usually not. And so again, we play the game of probabilities here, and I set my trade at break even, completely risk free now. Where was my take profit? Yeah, okay, now let me show you guys. 15-minute. Right, my take profit was really simple. Can you see these period separators? I know they're a bit like, you know, light, right? This is where the day started, this is where the day ended. Okay, and when the day started, you can see that price made its low, right, went up, right, and then this is New York session, created the high. Okay, now what I'm seeing is we have all of this. There we go. That makes so much more sense. All of this liquidity, low resistance lows. This low, or in fact this low, is holding this one and that all together, right? So my first take profit, I'm gonna actually check, see if my memory is right. My first take profit was actually this right here. This was considered like my Asian lows, right? My Asian lows, and I was looking for New York session to create the ultimate low of the day, which it did, by the way. It did actually create the low of the day. And so what happened after that was very simple, if I'm not wrong. That was my second take profit. Reason being is basically liquidity feeding into to fill this FVG, and that's exactly what happened here. Filled it up and went up. If you guys still doubt me, Avid, your TPs are all hindsight. Before I actually go to my proper FXCM, not FXCM, Forex.com chart, go to my AKFX Telegram journal. You will see that. Like, this is before I even recorded this video. This is what, like a week back, I think this trade was, if I'm not wrong. Yeah, it has to be, because this week we took the previous week's high. Yeah, so this is a week back, right? And the reason I'm saying that, the reason I'm stressing and emphasizing that, is because your targets literally equate to how much or how little you, the efficiency of your targets, and the loss. You sold over here, you can have the same stop loss as me, but you'd make less than me if you just took your profits over here. Now again, there's nothing wrong with you doing. Works with your psychology well, go for it. Do not let myself or anybody talk you out of it. However, I'm just saying, for me, right, this is how I'm increasing the efficiency of my take profits. First one over here, second one over here. For example, I'll just give you an example. Perhaps you could take, I don't know, 30% of your volume off. So now you're left with 70%. Then you take 50% of your volume off, right? So now you've taken off 80% of your volume. You're just remaining with 20% of your volume, right? And this 20%, you could swing it, because now you've paid yourself 80% of your original volume. You're happy. You've paid the trader, right? And you can leave it to do whatever the hell that it wants to do. Right? And eventually, you know, price actually came back down and took this low. Maybe you want to pay yourself even more. Maybe you want to take off the entire position after price comes and takes from strong high to weak low. Perhaps, right? Who knows? So, yeah, man, that's that. That was the entire trade. And now for actually seeing whether I'm right about my take profit. I'm freaking bang on. Oh, no. Oh, okay, my bad. Well, I had a better take profit, so I'll give myself that. I thought my take profit was over here, but all right, man. I mean, fair enough. Yeah, so there we go. I was almost right, but it wasn't here. So yeah, guys, that was my entire trade. You can see 2.6 pips stop loss. I wish I could show you guys the M1, but unfortunately not. And that was it. That was the entire trade. Beautiful, beautiful trade for 1 to 25R. Hope you guys understood that. We are on 28 minutes right now. I will record the other two in a different video, I think. 30 minutes-ish is where I like to top off each video. Thank you guys so much for watching, man. I hope this helped you guys. I hope this gave you guys more insight as to why I looked for the sell, right? Previous month's high. Again, rewind back to this video and find out why I was thinking that there could be some kind of potential or probability for the previous month's high to be taken. Pay attention to the raids. Besides that, once that previous month's high got taken, that's liquidity being taken during... See, this is the thing. The where of this was after price took the previous month's high and filled in some part of the FVG above it. That's the where. The when is the New York kill zone. All right, and the Y is that lower time frame bearish structure that I found on the M1, that little bearish M1 breaker setup, which is actually a bearish QM on the seconds time frame. I don't have access to seconds, but yeah. So that's it, man. Hope you guys took something away from this video. If you did, please feel free to leave a like, subscribe to this video. If you guys didn't, feel free to leave a dislike. It's perfectly cool. See you guys in the next one, man. Where we cover 1, 2, 3 beautiful 2 setups over here. Very sad, unsuccessful setup over here, but it is what it is, you know. All right, man. See you guys in the next one. Peace out.